Right, we'll go on to the approval of the Treasury Management Policy. John, welcome. I'm happy to move this. Do we have a seconder for this? Councillor Cashmore? Yes. Seconder. John, go ahead.
Thank you, Chair. Look, I'll take this paper as read and just highlight a few of the key points. So this update on the Treasury Management Policy, the key changes from the current version. The first is the inclusion of water care, as they've agreed in principle to a centralised Treasury operation. Also explicit recognition that CCOs will be consulted on matters of material significance to that CCO. I've also updated.
John, could you just be a bit more explicit about water care have in principle? So what does that mean?
So water care have, at their board, they have approved a draft service level agreement, and they've endorsed this document, this Treasury Management Policy, subject to Auckland Council agreeing the proposed service level agreement. Now we have again have no issues with that agreement, and are just waiting for details such as an agreed start date to give effect to that agreement and sign that agreement.
Okay, thank you. Sorry. Yep.
The third change, updating the credit rating objective from at least A+ to AA, our current rating. So that's to confirm Council's commitment to our current credit rating, which is a plus in front of our overseas and domestic investors. We've also standardised our borrowing limit calculations to make them consistent with Standard & Poor's. Now this is generally done to avoid any unnecessary confusion to how we calculate those ratios. So the key debt to revenue ratio is now going to be calculated consistent with the manner in which Standard & Poor's do.
So why did we have the other system before, where we had the variation, John?
Historic. That's about the best reason I can give, to be honest.
Yeah, okay.
And also recognise that we do have covenants which we need to abide by with the likes of the local government funding agency. Just happy to take any questions.
Councillor Simpson.
Thank you, Mr. Chair. I refer to the executive summary, the first bullet point under 4 about water care. You mentioned when the Chair questioned you that that they have agreed subject to. Now my question is around that subject to. My understanding is the subject to was a SLA signed by the Mayor, and whilst the draft has been done, it's not, it hasn't been signed, and yet your paper asks in bullet point 8 that should we approve the recommendations that it's effective immediately. But that wouldn't meet the water care's objective of having that SLA signed and the specifics agreed between both parties. So how can we agree to these recommendations if the agreement hasn't been signed?
Yeah. Yes, you, Chair. When this paper was drafted, it was initially thought that this would be signed by this time. So I suggest what we probably do is make an amendment in the TMP that the inclusion of water care will take effect from the date agreed in the SLA once signed.
Yeah, I'd support that. And my second question is, so I think that's a really key point, and that it's a pity that she actually didn't alter the recommendations before this discussion. But my second point is, look, our debt to revenue is obviously very challenged. If water care, I understand that water care have, they've agreed under duress, my words, not theirs, but they've been brought to this party. If Watercare were able to borrow separate to council, they could potentially raise more money rather than being embraced into our treasury and then maybe challenging our borrowing capacity. My understanding is that the board members were quite keen to look at having a sort of a SPV or something around their ability to be able to raise separately.
Through you, Chair, to be very clear about the credit rating of the group, it's a group credit rating. So when Standard & Poor's look at council looking at the group, so our debt to revenue calculation is on a group basis, including water care. So if there were projects, whether at the council level, water care level or transport level, that we could successfully bring off balance sheet through the likes of an SPV, that would benefit that would help our credit rating, allow us to do extra investments without impacting the credit rating. But to be quite clear, when Standard & Poor's and Moody's, when they look at us, they're looking at the group, which includes Watercare.
Okay, and my last question is the financial impact of the updating of the credit rating from A+ to AA.
Well, through you, Chair, our credit rating is AA. In the previous, or in the current version of the Treasury Management Policy, it had an objective of at least A+. Now we're being explicit that we should have an objective of keeping the rating at AA.
There's no change.
So there's no impact on our financing charges. But it does send a very good message to investors and potential investors that we are committed to doing all we can to maintain that AA rating.
Mr. Chairman, I might look at an amendment based on the signing of that SLA while other people are talking. All right?
John, you indicated you would have a few words to change in that recommendation anyway. Did you? Or not?
Yeah, through you, Chair, that's fine to make this, or the Watercare portion of it, effective once that SLA is signed and a date for a group treasury operation to be implemented.
I mean, if the move, I'm happy to have that anyway, just made if the second is happy with that.
Are we still on questions?
Well, so, yep.
Just to clarify the Chair, it'd be good to have those other amendments, such as the changes to credit rating objective, how we calculate the debt to revenue.
Yeah.
Obviously good to have those effective
Yep.
once this is
Okay,
passed.
so someone will work on the appropriate wording. So, Councillor Simpson, all good?
Yes, thank you.
Yep. Councillor Newman.
Can you just tell me what's the timing for Watercare's? I mean, they're going through the assessment. The credit rating agencies are doing their assessments at the moment, aren't they? So, when does Watercare anticipate getting its credit rating from the credit rating agencies? Can you advise?
Through you, Chair. So, if we're talking about the group credit ratings,
No,
they have
about
been.
Watercare.
You have to ask Watercare that question, but obviously going forward, once we have a group treasury, Watercare won't need a separate credit rating.
What happens if Watercare's credit rating is the same as Auckland Council?
Through you, Chair, Watercare's credit rating isn't the same as Auckland Council's.
That wasn't the question. The question was what would happen if it was, because they could, I mean, they've got a pretty prudent balance sheet at this point. They have the ability to raise revenue, as we do, because we've got coercive powers. So what would happen if they had the same credit rating? Same borrowing cost, really, isn't it?
Also, you, Chair, the reason that they have a credit rating now, which is one notch below, is because of the guarantee and the support of the Auckland Council parent. Their standalone credit rating is several notches lower.
Yeah, I think they can probably achieve the same. But the other question that I had in relation to this Treasury policy, I understand, I read the draft policy. I mean, I actually don't want to support this policy today. I need to say that I do. Personally, I think there's a little bit more work that needs to be done. With respect to this policy is silent in terms of where we're going, if we're borrowing in the domestic capital market, if we're going offshore. Now, I understand that we are selling our bonds globally, and then we have to obviously we have that money brought back into New Zealand dollars, and that's adding the cost in effect to this council. Why are we continuing to go to the global market when Crown isn't?
Through you, Chair, the Crown does go to the global markets. They issue in New Zealand dollars, but they have global investors, very similar to what the LGFA has. The reason why Council goes to the global markets is mainly due to diversity. As Auckland Council debt is now over $8 billion and growing, we are restricted through how much we can borrow through the local government funding agency, which is a covenant. The New Zealand capital markets are also very small. So, for example, for us to do a, say, 7-year plus transaction now, there wouldn't be the appetite from wholesale or retail investors in New Zealand. We do it simply as a matter of diversity, and you should note our approach is exactly the same as all other large New Zealand borrowers, such as the main four banks, such as the likes of Fonterra. Just for your reference, the day after we did our recent euro transaction, the Bank of New Zealand issued a similar sized euro issue for 6.5 years, priced marginally above where we issued. And again, so their approach is totally consistent with our approach.
So your argument is that the going out to that global market is the equivalent in cost as going to the capital market in New Zealand. Understanding that our market in this country is smaller, but that the cost is the same if we go out to the global market, or are we paying higher?
Through Chair, no, that's not what I'm saying. We do tend to pay slightly more for overseas borrowing. The reality is, though, is that the New Zealand market and what we can do through the LGFA is not sufficient. The other point you should bear in mind here is that we do have another event, such as a global financial crisis. Your domestic market is probably the last one to close. Therefore, we need to keep some, what I call powder dry, both with the LGFA and our domestic market.
How much is the what's the difference in cost going out globally? Because it's the cost of this organisation. You're saying that's slightly more. What does that mean?
Again, through you, Chair, it's very hard to put an absolute number on that. So what you probably have seen in the press is the press compared where the LGFA issued in their 2025 maturity, which is just above 7 year, compared to our 7 year transaction. Now, what that comparison doesn't take into account is two things. One is that it didn't take into account the fees that Auckland Council would pay to LGFA to issue through them, and didn't take into account the fact that the LGFA issue size was 24 million, ours was 840. So you're not comparing apples with apples. If you want a ballpark estimate, and the estimate of what it costs, it changes over time as things like cross-currency swaps changes, investor appetite changes, whether it's here or overseas, you're probably talking a couple of basis points per year.
Has Watercare been borrowing in the global market, or they've been going domestic?
Through you, Chair, Watercare borrows at the moment its long-term funding through council, because it's the cheapest way to do it, and we pass that on. They fund their short-term funding through domestic commercial paper, which we do as well, and they would fund a couple of basis points higher than us because of their lower credit rating.
All right, it's a debatable point. Thank you, Mr. Chair.
It's quite interesting, councillors, that Mr Butcher, who's the LGFA chief executive, actually was our treasurer at council, and indeed started the program of overseas borrowing in 2012. So basically he put that in place, and I believe he got treasurer of the year for several years in a row. So this is not something new or sinister. This is something that's been put in place for some time. And as I say, Mr Butcher was certainly the instigator of it and made the recommendation. So Mayor Goff, and then Councillor Quacks and Councillor Mike Lee.
Yeah. Thank you, Mr Chair. I think that you just gave part of the answer. My first question was just to get a confirmation that Watercare is doing much, if not most, of its borrowing, certainly its long-term borrowing, through council anyway. That's a fact. Yeah. That's correct. The second thing is, given that we are carrying out some of the Treasury functions for Watercare already, how much difference does it make to bring them within our policy entirely, and what are the benefits of doing that?
Okay. Through you, Chair, there's three main benefits. The first is around cost. So you'll see reduction in the overhead costs of running a separate treasury system, a separate credit rating, separate legal arrangements with banks, etc. The second element to the cost argument is Watercare, because they do have a credit rating lower than council, they'll never be able to borrow more efficiently or transact in the financial markets more efficiently than Auckland Council parent. The second main reason for a combined treasury is one of risk. So we are eliminating preventable risk by combining treasuries. So, for example, if you look at now, say, the exposure that the council group has to a bank, say, take any bank, take the BNZ as an example, I couldn't tell you what our exposure was, because we'll have some transactions with BNZ, and so will Watercare. So there's a lot of preventable risks that we can get away by having a centralised treasury. The third is reputationally in the market. Investors do find it a very strange situation, and when we start to look at numbers around the derivatives that we have on board, the debt that we have on board, and we are giving different answers as far as, well, this is a group basis, this is the parent basis, this includes part of water care, but not all water care. It adds confusion which is unnecessary to the markets.
Thank you for that. Through you, Mr. Chair, I don't think you can, but I'd be interested to know if the value that we gain from that is quantifiable in dollar terms.
Look, you could go through the overhead costs, and there'll be a saving there of estimate anywhere between probably $500,000 to $1 million. As far as how much more efficiently we transact in the financial markets, look, it's a positive number. We could argue how many basis points it is, but it's clearly a positive number, because it must be.
So you're talking about benefits in terms of millions of dollars, likely?
Over the long term, definitely.
Thank you.
Councillor Quakes.
Yeah, thank you, Mr. Chair. John, I noticed that our borrowing is pledged against, in some cases, against rates. In other words, ratepayers carry the can if we default. Is that right?
That is true. So the security that all borrowers get, wherever they are, is a security over rates revenue and future rates revenue.
So what percentage of our borrowing is pledged against rates, and what percentage is against other securities?
All our borrowing is secured over rates.
Pledged over rates.
Correct.
So in the unlikely event that council would default, what would be the mechanism that would trigger the payback of that debt?
Okay. Through you, Chair, I mean, this is a bit of a theoretical argument here, but let's say for some reason we didn't pay a debt, a coupon or a repayment, then you'd expect councillors to levy a rate on ratepayers.
Or is it the councillors or the receiver that would levy that?
In the first instance, the councillors would have that opportunity. If for some reason the councillors didn't, I mean, as I understand it, this is more of a legal question, there's a wide variety of powers where eventually the central government could appoint a commissioner, come in, run council, levy a special rate, and that debt holder could be repaid. I think this is a highly sort of theoretical argument.
Councillor Lee. Mike.
Thank you. It's often assumed that all the politics in this organisation goes around this table or happens in this room, and it's probably not necessarily the case. I understand there has been quite a lot of debate between Watercare and council financial officers over Treasury policy, but we'll leave that to one side. I'm concerned about messages that are coming through the market and are being expressed in publications like the National Business Review about the council's mysterious, on the face of it, offshore borrowing. About €1 billion has been sold in bonds, or in effect borrowed, in London on 2 occasions this year. On each occasion, we're paying significantly above higher interest than if we work through the local government funding agency. Rather than getting an explanation here, it would be good to have a report explaining to the members of the governing body, members of this committee, what is actually going on and why aren't we using the local government funding agency's facilities to the maximum and saving millions of dollars a year if we did that. It should be good to get a report.
And a response to
if necessary, I'll write to you, Mr. Chairman, about it.
Yeah. Through you, Chair, just to cover off that point about the LGFA, now we do have that cap at 40% of their issuance.
I'd like to see where we are on the
Yeah,
cap
so-
and all
so
the
as-
rest of it,
as a-
and what we can, if that cap is a little low, given the value we have in this region, what are we doing to change it? But I am very concerned in terms of even borrowing overseas. Are we getting best value, or are we favouring one particular outlet or one particular bank or market.
No. Through just to clarify a few of those points, let's go back to this cap at the LGFA at 40% of their borrowing. So as at 30 June, I think we're around 29%. So to be prudent, remember this is a covenant, we can't breach it. It cross defaults to other obligations that we have. So what we do is we look ahead to the next LGFA maturity. Now their maturities line up with the government bond maturities. What we assume is that we want to refinance the entire amount of that tranche we have through the LGFA, but no other councils do. And after you adjust for that, we remain within that 40%. That's prudent risk management, so we don't breach that covenant. Now, why do we go to Europe and the big capital markets of the world? We're setting ourselves up for the future as well. We are too big for the domestic capital markets in New Zealand, and we have restrictions through the LGFA. So if you look at the success of the European issuance, we now have over 100 different European investors investing in Auckland Council. Again, it's very prudent to diversify our borrowings in different markets. We don't want to become dependent on any one or any two markets.
Well, I'm just interested in the €1 billion on two occasions in London this year. One, I think, earlier in the year, and one this month.
Yep.
So,
through you, that's correct. But bear in mind that our approach of utilising a mixture of domestic markets and offshore markets is totally consistent with what any other sizable borrower in New Zealand is doing. The big four banks, Fonterra, your other companies. There's nothing secretive or unusual about it. It's simply prudent risk management.
well, that may well be the case, but according to the National Business Review, it is unusual, and their informants, it is unusual. So it would be good to get a written answer.
Through you, Chair, I think we know what's sometimes written in the press. I don't think you'll find that a lot of New Zealand institutions at all think it's unusual. I'm sure
$2.85 million extra in interest per year.
Again,
I'm uncomfortable about that.
Through you, Chair, that is not an accurate comparison. No, it's not an accurate comparison. As I explained, that's comparing the LGFA 2025 latest tender without adding on fees to the margin that we issued at. One raised 840 million. One issue, the LGFA wanted 30 million, they got 24. So if they wanted to get 840, obviously that price would have pushed out. So again, we can make up whatever facts we like, but we've got to compare apples with apples.
Could you just say that again, John? Just explain that again. I'm a bit slow today.
So again, through you, Chair. So the LGFA, they run tenders, and normally those tenders go very well. At the moment, there's not a lot of demand for long-dated, call it 7 years plus paper in New Zealand. So they went out to try and raise 30 million. They got 24 million of bids.
Didn't get it.
They didn't get the 30 million. They got 24 million. In the euro markets, we successfully raised 500 million euros, about 840 million Kiwi. We had a book of 2.2 billion or so well over 4 times oversubscribed. And across our 2 euro issuance, now we have over 100 investors. So we've set ourselves up very well for the future to tap a lot of this big investor demand out of all parts of Europe. It's simple risk management.
I'll be dropping you a line, Mr. Chairman. We can get a written response.
Yep.
Because it's not going away.
So, councillors, just will say the MBR did an online story a week ago, 10 days ago, 2 weeks ago, and we actually sent a response. They did not use that response at all, and in the story that was just in the MBR, they've used a little bit of it at the end of the story, but basically they've just ignored our explanations. John, could you just do one thing? Could you just explain to us what LGFA are concerned about if we were to break the covenant? I mean, they obviously have great concerns about what can affect their ratings as well.
Yeah, through you, Chair. I mean, the reason for the 40% covenant is if we issue much more through the LGFA, the credit of LGFA and council essentially become the same thing. So from a rating agency point of view, when they look at LGFA, they want that diversification. They don't want the LGFA simply to have Auckland Council as its well, it is, we are the major customer, but its only customer, or the vast majority of it. So again, that's what S&P look at when they rate LGFA. again, it's diversification of risk.
Yep.
I mean, so you, Chair, I mean, the question I should be getting asked, I would think, is if we were not borrowing overseas, I should be getting asked the question, is that all the other big borrowers in New Zealand diversify overseas, why aren't you?
That was a good question. Councillor Cashmore.
Yes, thanks, Mr. Chair. Thanks, John, for that explanation about the LGFA stuff, because that was a little bit mischievous, perhaps. The question I have is concerning the debt rollover timeframes and the FX and the derivatives, and perhaps an explanation around that. I seem to recall 3 or 4 years ago where our debt profile and timeline was around 3 to 5 years, and now extending out to 7. What is the plans going forward on that 7-year debt rollover and the FX and derivatives?
Yeah. Again, through you, Chair, so to cover off the FX and derivatives, so to be quite clear, when we borrow in foreign currencies, we swap that back into a New Zealand dollar exposure, so we don't carry any foreign exchange risk. Again, that is very consistent with what any other large borrower would do, unless they had offsetting revenues in a foreign currency. So again, prudent risk management. Your second point about the term of our debt, or the average maturity of our debt, when Auckland Council was first established, it was very low. It was sort of no more than 3, maybe 4 years. Now, the reason for that, primarily, at that stage, was that the legacy councils in those days could only borrow in New Zealand dollars, and the New Zealand capital markets are small, and it is difficult to get that longer maturity. So what we've done by being able to access the offshore markets is lengthen that maturity profile, where it's now approaching 7 years.
And by lengthening from going from 3 to 7 years, has that decreased our annualised costs of interest on debt?
Are you going to...
It's a combination. It has reduced our refinancing risk from the point of view that we've got a lower dollar value that needs refinancing in each year. So if you did see a spike in the markets, such as you saw post the global financial crisis, less of our debt will be exposed to that expensive repricing.
Thanks, John.
Councillor Cooper.
Rather than be suspicious of what you're doing, I'm actually very pleased. I mean, we've got to diversify. Every prudent investor never put all their eggs in one basket. That's a recipe for disaster. And, I think the reality is we've got people here who are experts. They are very prudent. I haven't seen a rash public servant. They're not very often. So I'm really happy with what we're doing. And I mean, if you look at the super fund, huge funds like that, they diversify all over the world, and we just have to. We can't make money out of ourselves, just like we can't make money exporting to ourselves. So I'm very comfortable with the recommendations, Mr. Chairman. I just wanted to give my support.
Okay. Thank you, Councillor
And
Cooper.
thanks.
Councillor Fletcher.
Oh, thank you, Mr. Chairman. I think it's really good that we're putting our minds to this, and in terms of really good contestable advice. I have a completely hypothetical question I really want to stress that it's hypothetical. If this council should ever want to sell any of or parts of its CCOs or anything else, would your advice be still the same today in terms of having it all under the one umbrella? Treasury management?
Yeah. Through you, Chair, it would be. I mean, in the event that, again, theoretically, a CCO was to be split off, there'd be an allocation of debt and derivatives and things like that. I mean, these things obviously happen quite frequently. I mean, the most recent large example of this in New Zealand would have been the split of Chorus and Spark out of the old telecom.
That's right, Councillor Fletcher. Yep, Councillor Watson.
Thank you. One of the other remarks that were made in that NBR article was that the council would need to pay more in fees and other expenses. What are those other expenses they would be referring to that would be additional in an offshore loans as opposed to something that was within New Zealand? What expenses are they referring to?
Through you, Chair, they're saying, can you read out the sentence?
But basically just said council would also need to pay more in fees and other expenses on top of the basis point rise that they referred to. But basically, I'm just curious to know what are those expenses that would be incurred overseas that wouldn't be incurred here.
Through you, Chair, I presume they are meaning, I'm guessing what they're meaning is obviously the more expensive flights to fly to Wellington and other places around New Zealand then will be to fly offshore. I assume that's what they're getting at.
$1,000.
Certainly some flights are more expensive than others.
Pubs would be dearer over in London too, I'd imagine.
Oh dear.
You pay for that yourself,
Thank you.
though, don't
Anything else, Councillor Watson?
No, that was just...
All good. Councillor Lee.
Mr Chairman, this is the Finance and Performance Committee, and in asking questions about a matter of public concern that has appeared in at least 2 issues of the National Business Review, and to hear the Deputy Mayor say it's mischievous, I think that's unacceptable. Our role is to scrutinise and seek accountability. We're talking about serious amounts of public money, not our money, other people's money that we're responsible for. And if people who question this are to be dismissed, and the MBR, and God knows how much money we pay to them in subs, given the copies that are around the building are to be dismissed, I don't think that's really appropriate, given we are the Finance and Performance Committee. We're meant to be asking questions. There's a huge amount of money at stake here. Thank you.
Councillor Filipainen.
Thank you, Chair. Look, I am asking whether there is going to be a report back based on the information of NBR, because if it is, I think it's important that it comes back with the truth. And I mean, I also was aware that there was an memo sent to NBR to correct the information that they had, and they didn't print it. And I mean, it appears that some of the councillors here are taking the word of NBR as gospel.
Yep.
I understand that that the trip overseas in regards to diversifying was a very successful one. But again, that's what I'm hearing. So I look forward to the report, to at least put the facts on the table. I personally know that there was an NBR report about myself, and I mean, even that was factually wrong. But ultimately, I look forward to the report coming back and from what I'm hearing, the success of it. Thank you, Chair.
We'll have something on the meeting for the 11th of December.
Thank you.
Any further questions? No? Okay, we've got the resolutions up there, and moved by myself, second by the Deputy Mayor. All those in favour?
Aye.
Against?
Point of order, Mr Chair, I moved an amendment. I did.
Seen the amendment?
I handed it up 10 minutes ago.
Anything about it. You haven't moved it or seconded it.
Yes, but he was waiting until the questions were complete as a courtesy. Otherwise, I would have...
Happy to second it, Mr Chair.
He hasn't asked to move it. Sorry, I'm just hearing what we're not trying to be tricky here, and it wasn't passed to me.
He had a question, then he had his hand up.
Mr Chairman, respectfully, point of order. I handed an amendment on this item up to the officers to be tabled for consideration at the conclusion of the question. The amendment seeks to defer so that the matters that we've talked about can be reported back. I'm disappointed that a decision has been taken to move ahead with a vote. I've been polite and deferential to you, Mr Chair, and I'm reliant on your good stewardship of the meeting.
And objectivity.
But if I can't put up an amendment that seeks to address the matters that have been raised in questions here today, I'd like your clarification as to what opportunity there is for me to have this matter addressed.
December the 11th?
Yeah, it's coming back.
So there's a report coming back on December the 11th, and my understanding it will consider all of the things that you've got here. So we've passed the resolution, we've passed it, so it's all passed, and on December the 11th, your matters will be considered in the reports.
Point of order,
Yep.
Mr Chairman. I seek your guidance on your chairmanship, because we have had over a number of meetings, you have been generous in allowing questions and comments sometimes, and then on other occasions you have ruled that you want questions and then you want comment. And so I just seek your guidance on, in terms of consistency, so that we can participate in the debate meaningfully and courteously. what your chairman's style will be for the future, because I think we have a disruption today, and I observed my colleague with his typed amendment waiting patiently for questions to conclude in order that he could move his amendment. So I'm really seeking your guidance, and would ask that you give us clarity on that, please.
Well, I've made a ruling on this, but as to the wider question as to whether I will continue to be generous and let people, I get a lot of criticism from some members around here for being too generous. I actually don't intend to change my generosity in that regard, as long as people are not being pedantic or frivolous or whatever, then I will continue to be generous in my chairmanship and letting people ask several questions. But I've made a ruling. I've made a ruling on this, Councillor Newman. I've made a ruling on this. We are moving on. If you've got a new point of order on something else, please.
Mr. Chairman, so I want to be being quite clear. So your ruling is that in the future we'll have questions and comments at the same time.
If that's how you want to do it, but no,
I'm
going to go questions and then we have comments. I thought generally there were questions pretty well all the way through, and then at the end maybe a few people morphed into making comments, but I didn't get any complaints either.
I think
After the resolution was changed, so I've moved that when we're having a report on December the 11th, and this will be passed on, your resolutions. I think we've got them all covered actually anyway, but that will be part of the report on December the 11th. Right, so we're moving on to the next item.
11.
Right.
Thanks, John.